Hi there, it's Matt Samet with Fortress Financial, and I'm here to talk to you today about those precious metals, those glittering gold and silver. Silver they call the poor man's gold, but you know what? It's a great way to hedge yourself against potential problems in the future. Gold is probably the primary way, and I'm going to talk about it now. And we own gold late in the year. We bought it, or we recommended it for our customers. We don't buy it. All we do is provide recommendations. It's up to them to decide. We had huge returns from the end of December, where it was 1075, and it ran all the way up to 1300, basically in late April, early May. And we thought that was an opportunity to take some profits because it was just a big movement. And for that movement in gold stocks dramatically went up even much more than the price of the underlying gold itself. So the returns were incredible in a short period of time. So what happened there? Why did we decide to take our position? Because we love gold. And we didn't fully exit. We just took some profits, which we do believe. Sometimes you got to take profits, move on, and smile. Never hurts to take a profit, we tell people. But what happened was we usually see seasonality in gold in that the worst period we're in right now. But interestingly enough, it went down to 1200 by mid-May, and we thought, okay, we made the right call here. Where's it at today? 1350. It's moved. What's driven it? Political events. Brexit is one thing. Concerns about Italian banks is another thing. Concerns about Europe overall is another thing. The movement, political movement in the U.S. is another thing. We could keep going on and on. Geopolitical events in the Middle East is huge. All these things create a movement in precious metal prices. And we think that it may buck the trend, and we're probably going to recommend to customers different positions. We just put out a bunch of really good gold companies we like, gold ETFs, and overall how to own gold itself, which is absolutely imperative. By the way, if you want to own gold, send us an email, and we have a report on how to buy it, where to store it. It's critical you do it right. But let me talk to you about why gold tends to move. Historically, people looked at it as an inflation hedge, meaning the inflation's high, price of gold goes up. Not necessarily true, because we've actually done a historical study, and there were periods of deflation where gold moved, such as back in the 1930s. So it's not always the case. But we're so used to inflation, we're not used to deflation, that we always look at it as an inflation hedge. It's a hedge against crisis is the most important thing, and that's where we're at. We're in a serious period of crisis. Both the financial system worldwide, the monetary system worldwide, the debt outstanding both in governments, individuals, and corporations. It's a monstrous problem. What did we do from 2007-8 on? We doubled down. We should have let a lot of positions be written off at that point. Instead, the world doubled down and created a monster problem that's way too big to fix. And that includes derivatives, margin debt. We'll go through all these with you in a future video. But bottom line is, where do people look when there's problems? The oldest currency alive, gold, and again silver. It follows. Silver, the one thing about silver you got to keep in mind, it's also an industrial metal. So it's used in the building of a lot of type products. So when economies roll over, there's less demand for silver, so it probably won't have quite the move that gold has, because gold is purely a monetary asset. And a lot of people say, oh, where's the value in gold? The value is stored within it. People look at currencies and say, well, that's where value is. But if you looked at a bill, a Canadian dollar, a US dollar, a euro, whatever, you're relying on that government to honor it and give you money or make it exchangeable. At some point, if they're way too broke, that doesn't necessarily happen. Whereas if you have a hard asset, such as real estate, and in this case, gold, it will be worth something, and it potentially could be worth a huge amount. We actually think gold could have a run from current levels at 1350. We honestly think that 5,000 is not unheard of whatsoever. And if that happens, gold stocks will absolutely soar. So we're going to position our portfolios at Fortress, which only our customers see, so that they see the best opportunities, because you got to own the right companies. And you don't want to own the wrong ETF that doesn't actually store the gold or back it up with real gold. You got to be real careful what you invest in today's world, because there's a lot of things that are dangerous. So we help people avoid those pitfalls. Anyways, don't forget gold. Don't forget silver in your portfolio. Crisis hedge, a monetary crisis hedge. It's real. It's here. It's going to get bigger. And just don't ignore it. Thanks a lot.